Okay, we got the inflation data, the PCE inflation data came in, the headline number came in right in line at 0.2%. The year over year number came in right in line with the head number on a year over year basis. We had the market rally with that. Let's take a look at the data. The headline month over month came in right in line, 0.2% with what was expected. The core month over month was exactly the same, 0.2%. That is month over month data. The year over year data, the PCE year over year, came in right in line with expectations, 2.5%, 2.5%. That was the previous reading of the prior month, so came in right in line with expectations, the same level as the previous month. The core year over year came in better than expected. It was supposed to be at 2.7. It came in at 2.6, which again was right at that same level as the previous month. So it was expected to tick up a little bit on the core year over year. It did not. It came in better than expected and at the same level as the previous reading for the year over year in the prior month. So again, the market had a positive response to that. And next week will be a short trading week. We're going to have Labor Day in the United States. Market will only be open from Tuesday to Friday. We'll have the market closed on Monday. Tuesday, we'll get the ISM manufacturing data during the market session. On Thursday, September 5th, we'll get the private payrolls. And next Friday, we'll get the jobs report. Now, the jobs report, again, is really important to be watching right now because the last month is now the unemployment rate is now predicting a recession. It triggered the Psalm rule. Again, as the 3-month moving average being 0.5% above the low from the last 12 months. Add that with the last month's reading, so it is predicting a coming recession. So is the inverted yield curve. Inversion is the longest that we've had with the inverted yield curve since the 1929 crash. Again, deepening of the yield curve, which is what we have right now. Eventually, we'll get the uninversion of the yield curve, uninvert, and it will triggering that a recession is about to happen. And all these things are of a recession. But again, on the financial channels, we keep hearing, well, this time it's different. Thing on social media. Nevertheless, I digress. We're going to get the jobs report next Friday, so we want to be watching that. It's supposed to come in at 162,000 for the amount of jobs created. The unemployment rate is supposed to tick back down, so we'll be watching that. But again, it did. The uptick that we've recently had in the unemployment rate is signaling that we are about to have a recession. The week after this next week here, we'll get the week after that, we'll get the inflation data, the CPI inflation data. That will happen right before the Fed meeting, the FOMC meeting, which will be on September 18th, which again, I've told you long before the Fed is now signaling that they're going to do it, that I believe that is when the Fed would begin to do rate cuts and pivot, which again, that's what the pivot is. It's the rate cuts. Now, again, the herd believes that this is going to be extremely bullish for the stock market. And historically, it has been very, very bearish. So just some things to be paying attention to going forward. Next week, the jobs report. The week after that, the inflation data. The week after that, the Fed and the pivot. And the stock market has got a pretty good shot historically that it's going to put in a completed topping process either ahead of the pivot on September 18th with it or shortly thereafter. With the pivot, again, 2000 and in 2007, saw the Fed begin to lower rates. First rate cut, both of those cases, we rebounded for 3.5 weeks and then markets crashed. Likely going to be the case here. Again, it's have already priced in a Fed pivot. The Fed pause, bullish. The Fed pivot is bearish. The Fed pause has stopped their rate-raising campaign. Again, and at that point, again, markets have already priced in Fed pivot. It's going to price in the recession. And the Fed will be lowering rates because a recession is coming. The stock market will be dropping because a recession is coming, pricing these things in. Please support the channel with the link directly below that allows me to be able to provide you this information. If you like the chart, you like the indicators, let me know that by supporting the channel. I do need to hear from you in order to make it work. Again, I don't have any sponsors, just a direct relationship with you. So if you could take a moment to do that, I would really, really appreciate it. Anything helps. And again, check back Sunday for my next video. I'll talk about a few things that I'm not talking about in this video. Some of the daily and intraday charts. Just talking about these monthly charts and weekly charts here. Again, this is the Russell. The Russell, watching to see if we get this divergence. We had a divergence back at the 2021 top for the Russell. S&P made a new high. The Russell did not. They diverged from one another, and we sold off, and we could be getting this larger divergence as I've talked about, and a divergence in the more recent price action as well. A second divergence could develop as it did over here. So again, the long-term channel here on the Russell, eventually the Russell could be moving back towards that long-term channel. Again, if we usher in a bear market. S&P is about to make new all-time highs. The Russell is not. So again, a huge red flag there, as they often diverge at major tops. They certainly did so at the 2022 top for the S&P 500, 2021 top for the Russell. I'll be talking about these longer term channels. I'm going to be talking about these longer term trend lines of resistance here in the monthly time frame on the S&P, NASDAQ, Dow, and here on the Russell. Now, I will be posting a video Sunday morning, 7 a.m. in all likelihood Eastern time. I'll be talking about some of these charts, the intraday charts. Again, I talked about this bull flag pattern. Looks like it's trying to break out. If we exclude the shadows right here, previously I had included the shadows on my chart, and if we exclude it, it looks like it's trying to break out. But you have this bull flag, and I've talked about this at great length and detail. It does break out. Again, we'll be watching the peak over here. We'll be watching the gap fill at 20,398. We'll be watching to see if we stop making new highs or if we get a lower high. Should we see the advance resume? I'll be talking a little bit about these 60-minute charts in my next update. Same thing with the S&P. I talked about the consolidation. We had the divergence form, but all it did was give it a mild pullback and a sideways consolidation. We could now be attempting to break out of a triangle where NASDAQ is attempting to break out of a bull flag. So again, I talked about the S&P going and making a new high, either doing it sooner rather than later, or doing it pulling back and then doing it. But again, I've told you I believe it's going to move above 5670. Could be doing that right now with the breakout of the symmetrical triangle that has formed here. Momentum trying to turn up. And again, I'll be talking more about the intraday charts in my next update. So check back for my video Sunday morning, 7 a.m. Eastern time. I'll be talking about some of my momentum and trending signals. Again, could be setting up for a larger negative divergence, and I'll be talking about some of these charts and showing you some of them in the next video. Possible breakout there late Friday with a triangle as we've been going sideways. Talk more about that on Sunday. I want to talk about the monthly charts and maybe a little bit of the weekly. We just had the just wanted to take some time just to show you these monthly charts just real fast. Try to be shorter here. Just go over this information. We got the monthly close for August. This is the S&P 500 monthly chart. Again, I still believe the S&P is going to make a new all-time high. I don't think NASDAQ will. I think they'll diverge from one another. But we had sold off by nearly 10%. We hit our 10-month moving average here in the monthly time frame and the 50-week and the weekly time frame. And we bounced off those levels. Again, you have a possible hanging man here, but we're likely going to go up and make a new all-time high. Do that sooner rather than later, or pull back. But the S&P has tried to form a triangle now, and it's trying to break out there late Friday of that triangle. This is the candlestick in our monthly time frame. Now, what's interesting about this hanging man candlestick is you're getting a 9-count sell signal with it in the monthly time frame. NASDAQ got one last month, and it peaked, and we sold off by 15.75%. We rebounded back up. We closed the month positive here, erasing the loss during the month of August, but we had this 9-count right here. Again, I think there's a good shot that that is a peak right there. If not, we have an upper channel line that is directly overhead above that level. I think you are going to likely see the NASDAQ and the S&P diverge from one another. Now, again, here we had a 9-count. We went a little bit higher than the 9-count, and then we sold off there in 2022. And then we got a 9-count bottom here on the S&P monthly chart. So interesting counts on the monthly chart showing price exhaustion to the upside, price exhaustion to the downside, and now we have it here again. No confirmation to the spinning top that we had last month. You had a possible evening star doji with the wide range bar, and then the candle of indecision. We just got possible hanging man for reversal or a bottoming tail to continue higher. But that is the monthly chart there. Getting a 9-count last month on the NASDAQ 100. S&P in the monthly time frame where NASDAQ got the 9-count, the 13 followed by the 9, the double sequence count sell signal. It got it last month. We get it this month, closing out the month for the S&P. You got a 13 followed by a 9. Again, the 9-count give you an immediate reversal, or you can go a little bit higher and get a pullback or major sell-off. But again, I'll be watching to see, do we get an immediate turn or do we go a little bit higher? Probably going to go a little bit higher because we haven't moved to a new high on the S&P to move to a new all-time high. I think there's still that possibility. And we have in the monthly time frame as we close out the month here on the S&P 500, we have possibly a hanging man. Again, S&P is bouncing off the 10-month moving average. So again, if we have hanging man, we'll need to see it turn immediately and confirm that candlestick if that's to be a reversal. If we go fill the gap from the previous high, again, just because you get a 9-count doesn't mean you can't go higher, but it's showing price exhaustion that we have a 13 followed by a 9. So it tells us, hey, a top is likely forming. We had a 9 here. We got an immediate trend extension, but then we had a 9 here, and we went just a little bit higher, and then we got the big sell-off in 2022. I'll be looking, do we go a little bit higher, or do we not, and just start seeing this thing play out and break down below this level by the end of September or October for confirmation, which tend to be bad months for the stock market. So we'll be watching that. And then again, if we go a little bit higher, we'll be watching the gap fill previously, the 5670 area. But interesting, we're closing the month out with a 13, 9 double sequence count sell signal here on the monthly chart of the S&P. As we're doing that in the monthly time frame, the S&P bouncing up the 10-month moving average, we have this divergence over here give us a sell-off, and we're forming a larger divergence. Now, as we're going higher in the monthly time frame here on the S&P 500, you're forming this divergence right here. Here in the monthly time frame, on the stochastic and the more recent price action with that bounce off the 10-month moving average right there, the red line. But you're also forming this larger divergence right here with this previous peak right here. S&P is moving to a new high. The MACD is not. You're forming this massive negative divergence that, again, is likely to complete soon, probably surrounding a Fed pivot. And again, we got those 9 counts. We could still go a little higher. Again, I think the S&P probably will go above the 5670 area. And I believe we're in a topping process. S&P monthly chart here, bouncing out the 10-month moving average. Similar candlestick on the NASDAQ. Again, I believe the NASDAQ is likely peaked. If not, we can go hit the major trend line in the weekly time frame one more time. But you're back on July 11th. That, again, even before that, I told you we're about to get the July 10th high that we could sell off with the CPI data and form a peak. I think that formed a major peak on the weekly chart. A possible reversal bar here in the monthly time frame for a spinning top. It was not confirmed. We didn't close below it. We did on an intra-month basis, but we couldn't close below it. And we ended up, again, either getting a bottoming tail or a hanging man style candlestick. I think NASDAQ will go up to the 20,400 area, fill the gap. Whether it can make a new high or not remains to be seen, but I believe that NASDAQ has probably peaked. Could be wrong, and if I am, we go up and we hit that upper channel line in the weekly time frame. One more time, and here it is on the weekly chart just real fast. I told you back over here as we were moving towards these trend lines again that we would likely get rejection at them. They intersect here, and again we hit them, overthrew it slightly, and then turned down sharply by nearly 16%. Rebounded back up above this broken trend line, above the 20-week moving average. And I'm watching right now, do we just continue the rally towards the 20,400 area, or do we try to sell off first? I've talked about the possibility of a large ABC move. If we do have a 5-leg push here, you can have an A, B, and a C, and again hit that 20,400 area and get a lower high, and then begin to usher in the bear market. Again, likely going to be the case. But as I was saying, if I'm wrong about NASDAQ having already peaked and we're nowhere near the highs the S&P is, then again, if we do go higher, this trend line could be tested for a second time. New highs could be made with a divergence. Now, this divergence has given us a sell-off, but that's the trend line I was talking about earlier on NASDAQ. And I told you when we hit it, again, we peaked. I told you the very next day, leading up into it, again, this is likely going to form a top. And again, I still believe that. If I'm wrong about that, then we go up and hit the trend line again and go a little higher. But I still think you got a pretty good shot that the resistance is going to hold here. NASDAQ's hitting this long-term trend line. Here's from the 3,000 top. If you take it from this peak right here, we're just right there, slightly overthrowing that level. This is the 2022 peak, 2024, 2000. If you exclude the shadow, again, we're pretty much right at that level. So again, just something I'm watching. NASDAQ turned right at that trend line right there in the weekly and monthly time frame when it had peaked. Here I'm watching this trend line right here, including the shadow, and again it makes for a very nice channel. Whoops, sorry about that, hit the wrong button. But again, we've got these divergences forming. We had this divergence form at this peak right here. You have this larger divergence developing into some major resistance, long-term resistance for the NASDAQ. S&P is doing, or I'm sorry, the MACD is doing the same thing as the RSI. It's forming this divergence here with the 2022 top. So again, I think NASDAQ's got a good shot that it's turned. It's turned off of this trend line right here. It's turned off of the trend line in the weekly time frame. Now, in this chart, I talked about the NASDAQ channel from the pandemic low. And again, just connecting this upper boundary to this boundary is perfectly parallel to this lower boundary. We overthrew that level just slightly, as I've talked about. So this is a channel from the 2022 pandemic low, our peak there, the November 2021 high, then October 2022 low, and then currently our July 10th peak on the NASDAQ. So keep this channel in mind. But I wanted to show you this longer term channel as well. And again, this is a channel, this is all the data that we have on the NASDAQ. And if we take these lows right over here, these lows right in here, draw a parallel channel again with this peak over here connecting with the 2022 peak. You got a really nice looking long-term parallel channel that we've just slammed into and overthrown slightly, just like we did on the weekly chart. And again, I think you got a good shot at NASDAQ. There's a lower high with the topping process, again off of these trend lines that I've been talking about here in the monthly time frame, in the weekly time frame, and showing you. And again, this long-term channel on the NASDAQ. So I think it's very possible we get a much bigger sell-off with the NASDAQ right in this area. Now, keep in mind that the NASDAQ turned right off of this area. We got that 9 count in the weekly time frame. We've got the 9 count in the previous month in the monthly time frame. And we saw it begin to turn off of these trend lines that I've been talking about. So again, I think we have long-term resistance in play here on the NASDAQ, and that's why I think it's probably topped. You decide for yourself, but again, I think these trend lines got a good shot of holding as major resistance. Long-term trend lines, long-term channel on the NASDAQ monthly chart and on the weekly chart there with the pandemic low as I showed you previously. But back to the S&P 500, again, we got this bounce off the 10-week or 10-month moving average. Got a possible hanging man, or again, a bottoming tail that takes us a little bit higher. We have, so far anyways, again, a divergence that's developing the RSI MACD, and it's what that's doing. Let me just say this, NASDAQ was down for the week, down 0.75%, down 146 points. For the month, it was up 212 points. It was up 1.10%. So want to be clear about that. Down for the week, but up for the month about 1%. Now for the week, the S&P was up 0.25%. The NASDAQ was down for the week. The S&P was up 13.79. Again, we broke this trend line. We're coming right back up and slamming up into it. Possible backtest in play, but again, move to new highs immediately to a new all-time high, and we're just under that level on the S&P. NASDAQ's nowhere near it. Again, you can form this divergence, multiple point, triple negative divergence. I talked about this previously. Could sell off prior to moving to new high and then come back and do it later, or you could do it right here, right now, immediately going into the month of September. About 0.25% for the week here. On the monthly time frame, S&P was up 2.28%, 126 points higher. Again, in the monthly time frame, we had the dotted trend line from this high right here connected with this peak. We've overthrown that slightly. We have this trend line in play right here from these highs back over here, directly overhead. But again, possibly forming a larger divergence with this peak over here. And again, the MACD is forming one in and of itself with the 2022 or 2022 high. Again, as all of this is taking place in the monthly time frame, we're getting a 13.9. So again, maybe we go a little higher and then turn. Maybe we turn immediately, but we are hitting resistance areas. Now these trend lines are from the 2000 top. If we look at 2007 here, a little bit different. Again, in the monthly time frame, we take these highs right here in 2007, connect them, and then connect that to 2022, then directly overhead. If we have a bottoming tail at the 10-month moving average, we can go higher and again complete a topping process. If we have a hanging man, we've got to drop back below the 10-week moving average to confirm that as a hanging man reversal rather than a bottoming tail at the 10-month moving average. But again, massive multiple point divergence developing here. Every single one of these divergences has led to at least a 17% drop. Divergences back over here led to these bear markets of 51%, 57%. The divergences led to these 20, 35% drops and 27. So again, when this one's done, it's probably going to produce a reversal, usher in a bear market. Now, this is the long-term channel of the S&P 500. This goes all the way back to 1929. And again, if we include the shadow, it's the upper boundary is directly overhead. Okay, if we exclude the shadow, here again, we've reached it, and again we're getting a 9 count. So do we go a little bit higher with that 9 count in the monthly time frame, or does it mark an immediate reversal? But again, right here, I've included the shadow. If we exclude it, we're right at those levels right here, right now. Now, again, this trend line that we currently have, it's perfectly parallel with these other lows that were made here after the 1929 crash, and then the higher low here. So again, just connecting these lows, connecting these highs, got a really nice looking parallel channel. If we again exclude the shadow here, you're slamming into it right here, right now. So just something to be aware of. Talked about the Dow long-term channel, 125-year trend line. We're slamming into that one right now, and that's from 1899. But again, this is a very interesting channel that I'm watching here. Eventually, I think the S&P is going to come back to these levels right here, just beyond the pandemic low with the next bear market. Again, we're probably going to go a little higher up into this level, this trend line, including the shadow. And then begin to turn back down. And I think this midpoint will give us a bottom just above the pandemic low there. But if we break this dotted trend line, this horizontal support level is a level I'm watching, which again I think is a realistic expectation for the S&P to sell off, going back again to the 2000 peak, going back to the 2007 peak. That resistance now becomes support, and again the peak over here came in, and then we had the peak in 2007. They were only a fraction apart. And again, if we come back to the dotted line here, or this horizontal level with the next bear market, I think we'll have a bull market, but I don't think we're going to move to new high. I think we're going to get a bull market with the next time around. That's going to take us into the late 2020s or early 2030s, where we're going to get this lower high, and then we're going to get another dump, probably down. So just some things that I'm looking at here. But again, if we exclude the shadow, we're at the trend line right here, right now. If we include the shadow, you got a little bit more wiggle room to go a little bit higher here before turning back down. But I wouldn't ignore this chart, because again, the bulls are going to have a really hard time clearing this level of resistance if we're going to include the shadow, or again right at the level excluding the shadow from the 2000 top there. The bulls are going to have a hard time getting us above this level. My guess is we're going to go higher and make a new high, but then I think we're going to top out and turn. I think the NASDAQ is going to do the same thing, and again, that's what I've been talking about with those charts of the NASDAQ, the monthly and the weekly charts. Yeah, we've talked about this longer term channel on the Dow, and again, we're hitting a trend line that's 125 years old. And again, there might be a little wiggle room here, but look, again, you're hitting a trend line. We've seen sell offs again, 2000 came up to just under that area, and we saw the bear market. Didn't quite hit it in 2007, but again, you had this long period of a drawdown for about 13 and a half years. We rose back up. We hit it again in 2022, turned down, and now we're hitting into 2024. And that's, again, connecting it back to these levels here. So this long-term channel of the Dow and these trend lines in the monthly time frame, because we just had the monthly close, I wanted to show them to you. But again, it's highly unlikely that the Dow's going to be able to be successful in getting too far above this level right here. Again, sometimes channels slightly change, sometimes they expand, but again, this is where major reversals have been happening on the long-term chart of the Dow. So I wanted to show you that with the S&P. Show you here with the Dow that again we're more or less hitting that level with the Dow. S&P and hit it if we get a little bit more of a rally, as I've talked about. Again, that is the trend line, including the shadow, the upper boundary of the topping tail, 2000 top. Again, then we haven't quite reached that level, so I think that we could and see a possible reversal. But again, excluding the shadow, we're right at that level right here, right now. You're watching to see, do we have topping tails, hanging man candlesticks, not topping tails, but hanging man candlesticks on those monthly time frames for the S&P 500, SPY, and S&P 500 cash. As I said, is it a bottoming tail that again takes us a little bit higher up into this this upper channel line right here, which again includes the shadow, and again a nice parallel boundary here with these lows. So I think you've got a pretty good shot that you're going to go a little bit higher, but then turn surrounding this trend line right here on the S&P 500 long-term chart here. Showing you these long-term trend lines and the monthly charts, and again, most people walking the face of the planet will never look at monthly charts, will never look at this long-term data. More people can see things like this with longer-term charts on social media, but still, most people don't look at this. And even if they do, usually they'll go, well, this time is different. We don't have a recession right now, so we're not going to have one. We don't have a financial crisis. We're about to get one. What the recession indicators are suggesting. So I just wanted to show you these longer term charts, monthly closes. I showed you the Dow earlier in the week with the weekly and the monthly. So I wanted to take the time to show you this as well. By watching on this chart is, again, do we go a little bit higher and make a new all-time high and go up and slam into this trend line, or do we exclude the shadow and pretty much we're right at that level now? Do we start to see a reversal? That's why I wanted to show you those 9 counts in the monthly time frame, the 9 count that completed for NASDAQ last month, and then the 9 count that completed for the S&P for this month. I do think the S&P will make a new high above 5670, but don't think NASDAQ will. I think they will diverge. So long term, major resistance directly overhead on S&P. The Dow's hitting it. So is the NASDAQ on its monthly chart, as we saw earlier in the video. I'll post another video on Sunday, likely around 7 a.m. Eastern Time, and just a few other indicators. Charts I'll show you, but I wanted to show you these monthly charts with our monthly close, 9 counts, and so forth. Now, again, surrounding the Fed pivot going into September 18th, I think we'll begin to see red bars at some point going forward in September or October. It's NASDAQ right here, and again, green cloud, you got blue bars, and we're trying to bounce here off the 10-month moving average. This is a monthly. If I said weekly a moment ago, it's the monthly time frame. I'll be watching again for these larger divergences to play out with the MACD and the awesome oscillator. And again, we're forming one right here, right now, on the stochastic. If it starts breaking 80, you can get a bigger dump and take out that 10-month moving average here in the monthly time frame. On NASDAQ monthly chart, the Dow also got a hanging man looking kind of a candlestick, either a bottoming tail at the 10-month moving average or, again, a hanging man. Again, I'll be looking to see if we start getting red in September or October here on these monthly charts with the awesome oscillator. And again, MACD forming a massive negative divergence with the previous peak there in early 2022. Dow monthly chart. And again, S&P monthly chart here with the awesome oscillator. Again, likely a massive negative divergence developing with the previous peak. You got the same thing going on there with the MACD. But again, I'll be watching as we go forward in September, October. Do we start seeing a red bar begin to develop to complete the divergence, start coming back and taking out the 10-month moving average?